What's going on, everybody? It's Rod with Pow Group. Welcome back on The Pursuit of Wealth, your home for MJ Stocks, crypto assets, news, and interviews. Today is Monday, April 7th. Green, red, black, whatever you want to call it. Hope everyone's holding up well. In this video, we're going to be discussing the sell-off. Is it over? And did we avert this crisis? I think that we're more than likely going to see a temporary bottom, and we're going to see a huge V-shaped recovery. We saw a glimpse of it here today. And I mentioned this in my video yesterday in the live stream that we could see 479 on SPY act as old resistance becoming new support. And that's exactly what we got. I'll play the clip from that video from yesterday. And we had a huge bounce off of that support, that old resistance becoming new support. We went from about 481 all the way up to 523 in minutes, and VIX was absolutely exploding today, the volatility index. So volatility back in a big way after months and really years of just melting up. But before we get to it, make sure to smash like. It helps support me in the channel. If you're new, you can subscribe, tick the bell, all that good stuff. You'll be notified on any future videos or when I go live. And as always, this is not financial advice. This is for entertainment purposes only. You can also follow us over on X as well, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. So I'll play the clip from yesterday. And like I said, I mentioned, technical analysis 101. And I said that we could very well see 479 act as new support, and I even drew a trend line there to be watching. So I'll just play this real quick and then we'll continue on. But we were down about 27%, so that 479, very, very strong resistance at that point, and then we sold off 27%. So how does it work with technical analysis? Old resistance becomes new support and vice versa, right? So this is just technical analysis 101. I mentioned that we closed at the low of the week last week. We closed at the low of the day. That wasn't a good sign. So I said watch for 500 and more than likely to be lost. And we did have support there at 493. And then, like I said, I would expect that would ramp up into next week based on the weekly and daily candle closes being very, very bearish at the lows. And I said, watch 479. So we could see that act as old resistance becoming new support. It's classical technical analysis 101. But again, if you know nothing about charts, just plop the RSI indicator into your chart. You will see here that anytime. All right. So as you can see, mentioned that yesterday, and that's exactly where we hit today. And I even drew the trend line. I'll just forward a little bit so you can see here. I had that trend line drew right here, and it was right there. I can't really, for some reason, it's not easy to put my cursor on there. But as you can see, I had the green just above the green line, that yellow line there from the 479 top, and then we had that huge sell-off. That was the line that I drew, and it was this line right here. So as you can see, it hit it right perfectly on the money. You literally can't make this stuff up. So that's why we study charts and technical analysis so that we have an edge. Look at that line. I drew it there, 480, 479, and we literally hit 481.80 was the low of the day. And then off of that major support level, SPY jumped up about 8.6% off of that key major support. So I mentioned some people were saying, is a good time to get into money market, is a good time to exit. Well, again, we were getting close to resistance, right? You don't want to be selling. You don't want to be going short at support. I said resistance. I think I said resistance. I meant support. You want to be going long, and you want to buy near support, and you want to sell and go short near resistance. So when we're getting here, it's the opposite mindset. But quite often, retail investors want to do the opposite of what we should be doing, right? Because we usually listen to our gut or our emotions and what we're feeling. And generally, whenever things are going down, you want to sell it, right? You want to stop the bleeding. But if you know support and resistance, that's why it helps to learn technical analysis and look at charts. And you don't have to be a guru either. You can join, the Pow Group private community, for example, or any community. And I see it all the time now, where there'll be members in Pow Group that are saying, look at this stock or this crypto has a bear flag or a bull flag, and we all can see things coming, usually days, if not weeks before, sometimes months before it actually happens. Right? Show me the chart, I'll tell you the news. And we knew to be expecting this downturn. And I mentioned that we lost the monthly uptrend on SPY as well, so that wasn't a good sign at all. But the big bounce was mostly attributed to the fact that there was a rumor going around that Trump was potentially going to delay tariffs by about 90 days, except China, and then there was a whole back and forth with it. There was if China doesn't drop everything now, we're gonna up it like even more. It's just like, oh yeah, we'll get you back even worse. So it's just been a game of chicken, really. But as you can see, we're seeing all kinds of stuff here. So they're talking about Elon Musk calls for the United States and Europe to establish a zero tariff system or free trade zone. And UK Prime Minister Keir Starmer seeks new trade deal with the United States to remove tariffs. So we're starting to see what started off as, Armageddon and the end of the economy, essentially as we know it, and inflation and recession, even a depression. This could make everything even more bullish, right? So look at this. Europe says, this was about 7 hours ago, they are ready to negotiate tariffs with the United States. So talk about a plot twist for the uninformed, right? European Union says it's ready to discuss 0 for 0 tariffs with the US. Do we see what's happening here? It was an artificial, orchestrated sell-off. In my opinion, we were due for a cool down. And then they just exaggerate it. They sell it off so they can buy it up. And then they're going to unload. We're probably going to form a monthly lower high over the next few months. And then a monthly downtrend, and then that'll give them one more time to unload and basically capitalize on this volatility. Buy the dip one last time, see the final blow off top before a multi-year bear market, in my opinion. And here it is here. President Trump threatens additional 50% tariff on China if it does not withdraw the 34% tariff increase. So it's just a game of chicken at this point. And I posted on X earlier today, I made this resistance trend line yesterday that flipped from into new support on yesterday's live stream. I said to watch that level as temp bottom, and voila, hit it pretty much exactly. I said 481. It hit 481 today versus 479, and then we bounced to 523 rather. You literally can't make this stuff up. And then President Trump says countries from all over the world have reached out to negotiate new trade deals. And he said, what was the next one? Yeah, President Trump says other countries are now offering things that we would have never even thought to ask for. And then Israel agrees to eliminate trade barriers and trade deficit with the United States. So again, I've been saying for a while now, it was just a bargaining chip and a tactic to potentially get to even lower tariffs and bidirectional way, like a zero tariff. Imagine that, right? That would open up the economy like you wouldn't believe, but also bring manufacturing back to the US. So I think there's a method to the madness, but overall, we were due, like I said in this video, we were monthly overbought. We were due for a correction. We had barely any monthly support until 510. And look where we're hovering right now, right around 510, right? So that was the previous support. And then right here, that was the low of August. And then after that, we had 493, which is the low of April of last year. So we're back into April of last year prices, really. We're back into February 2024 prices. But again, that old resistance, double top after that into a huge downturn, right? In that pullback on the S&P 500, we pulled back about over 27%, right? So that was very, very strong resistance and a key level. And then once we lost these supports here in the monthly uptrend, weekly candle closed at the low, daily candle closed at the low, I was very confident in saying 479 would more than likely act as strong support. And then, like I said, right off of that support, and we hit 523 is just absolutely insane to see that happen in real time, right? I couldn't believe it. And once we got to 523, like we were bouncing from like 520 to 513, like it was a crypto project or something. Like the volatility was absolutely insane. And then, lots of Asian markets were down double digits and tripping circuit breakers and halts and all that kind of stuff. So overall, I said yesterday, I didn't think it was going to be Black Monday. I didn't think that it was going to be that bad. And I said, we'd more than likely start off rocky and then we'd end the day in a positive note. That's exactly what happened, right? Why did I say that? Because everything was pointing to 479 as a major level support, right? Close at the low of the week, close at the low of the daily candle. More than likely going to see a sell-off. Crypto started to sell off late yesterday. Futures opened up late yesterday. We were showing weakness. So I said the most likely scenarios, we bounce off 479 and then a recovery end of the day. And that's exactly what happened. And we're up here after hours as well. And then if we take a look at SPY here, we're actually gearing up for a stochastic bull cross on the weekly. So I would say over the next few weeks, we should see a face ripper rally. But again, it's more than likely going to just result in a type of monthly lower high and then a potential downtrend. So we might even see an inside bar based on the size of this range over the next month or two. And then into May, right? Sell in May and go away. That kind of lines up with my thinking where, we might just equilibrium bounce around here for a month or two, and then we should form a high and then a lower high after that, a lower high and then a lower low after that,
and then give us the monthly downtrend. So this will be the last chance, in my opinion, to load up before the monthly downtrend, and then we'll be heading to monthly oversold, in my opinion. Similar to what happened in 1996 to 2000 boom. We had a hidden bearish RSI divergence. RSI peaked in 1996, and then the price peaked in 2000, and then we went to monthly oversold. Same thing's happening now. It was about 4 years. We peaked on the RSI in 2018. Took about 4 or 5 years for the price to peak. Now we're seeing the monthly uptrend loss, and I think we're more than likely going to confirm a monthly downtrend over the coming months and head to monthly oversold. And that would probably put us somewhere around that 300 to 275 level on SPY. And there's a reason why I'm 95% money market, which is effectively cash in my retirement account, right? And I've been in that 95% cash now for pretty much in my retirement account in money market for the last almost 2 years. And same thing with Warren Buffett. He's sitting on record amounts of cash, and most of it's in money market. So, we're starting to see some sign of life here and a glimmer of hope and light at the end of the tunnel, where we could see, this bull cross on the stochastic MACD still quite a ways away before we see that happen. But, generally these moving averages, we start to gravitate back towards them. So would not be surprised if we started to gravitate back towards that 10-week moving average at 566. We also have the 200 weekly there at 454. So if we do see another drop down below, key support now is going to be 581. Lose that, then we'll look for 454. But overall, not holding up too bad here. And we'll see if we can get back to that 50 weekly moving average there at 562. There's a lot of resistance there. We have the 100-day moving average as well at 586. So I think, over the coming weeks, we should start to recover. We are gearing up for a death cross, though, with the 50-day moving average at 579 and the 200-day at 570. When those cross and the 50 is above the 200, that's a death cross. When it's the other way, when the 50 is below the 200 and they cross, that's a bull cross and a golden cross. So, yeah, we could potentially see one more leg down here. But, at the moment, we're sitting at 506 after hours. So even if we were to pull back to 480 again, that might see the moving averages cross, get that death cross out of the way. And then, we might see one more potential leg down. But I think there's a good chance, I would say probably 60-70% chance the temporary bottom's in now, and that we're probably going to recover, see a pretty massive rally and relief rally, V-shaped recovery even potentially. And then, like I said, will more than likely result in some sort of monthly lower high. And then over the course of the next, call it 2 or 3 months, form a lower high and then a lower low. And then that's when it will be look out below Geronimo. We want to be, tapping out of the markets, because nothing goes in a straight line forever. We've really been in a raging bull market since March 2020, and nothing goes in a straight line forever. And, we've seen worse pullbacks, and the bigger the boom, the bigger the bust. And I think, the only thing that makes sense to this market that we've seen in this rally, the only thing that even comes close to comparing is the .com days. And in the .com days, from that boom and bust, we saw a 50% correction. So if that were a similar scenario here, and we're even more bullish than we were that time, and there's artificial money printing if Congress gets banned from owning stocks, like it could be bad, right? And this time they were they were stimulating the market, the economy, citizens. They were giving people helicopter money, free money, and then the Fed was also buying stocks and whatnot, propping up the market, right? That's not something that happened this time around. So that tells me that it way more upside, way more aggressive upside and stimulus and all that good stuff, probably going to result in a worse bear market, right? Bigger the bull market, bigger the bear market. So if that were to happen, we might even see more than a 50% correction based on all of those factors that I just mentioned. We could see a 55 to 60% correction, in my opinion, and that'd bring us back down to around 275 to 250 on SPY, which we were just at 218 in March 2020. So that would still be about 30 to 25% higher off of that low, right? So it's all about perspective, and when in doubt, zoom out. And like I said, the thing that we can compare this bull market to the most is the .com days. Big tech has been absolutely, absorbing this market. And, we had that K-shaped recovery and big tech, crypto, AI. So the only thing that we can really compare this bubble to in 2025 is the .com days. And I think it's going to be very reminiscent of that when it's all said and done. So, I would gladly be wrong. I'd rather just us go up for eternity, right? But we know that that's most likely not going to happen, and wishful thinking and just not realistic. So let me know your thoughts and opinions on this. Do you think the sell-off is over? I think there's a good chance, like I said, 60 to 70% chance the temporary bottom's in. We're more than likely going to be heading back up to around 540, 550, I think, maybe even higher than that. And then see an inside bar over the next month or so, form a monthly lower high and then a potential lower low. into the summer and fall. And then I think 2026 is all but confirmed a bear market. But go ahead and end it there. Let me know your thoughts and opinions in the comment section. We'll continue the conversation there. It's Rod with POW Group. Once again, appreciate you joining us on the Pursuit of Wealth, and we'll see you again on the next video.